Hey everybody, welcome to the webinar. My name is Mark Shaws, the Pattern Trader. I'll be starting this in just a moment. We have a lot of participants, on this series, so I'm just going to allow a few minutes for everybody to get situated here. Great to have you back. Thanks, John, for confirming that. So I had some problems with my charts right before we, got on here. It's always nice right before the webinar to have everything crash on you. So I just want to check where everything's kind of closing out here. Have some just minor positions in the market right now. Mustafa, great to see you too. So welcome everybody. I'll be starting this in just a moment. Give it another minute or so. All right, so Michael says, thanks for being here, Mark. I've sent an email for the elite program. So Michael, fantastic. Look forward to having you as part of the group. All right, I think I'm just gonna, start it up and then, people can check in. Welcome to the second day of my 4-day live webinar series. I've subtitled this, How to Take a Piece Out of the Middle of Monster Moves in the Markets. And, I started to, allude to this yesterday. My price action, price pattern trading methodology hones in on, moves where I can see that there's going to be a trajectory. So for me, I need, a 1-day move, a 3-day move, a 3-week move, or a 3-month move, but I need to, see something where, the market is going to move from one level to another. What I don't like is, just encountering a, whipsaw market, a trading range market. And, my objective is not to try and, extract 7 pips or 20 pips out of the market. I'm trying to find those moves that have, setups that are going to extend for 150 pips, 350 pips in the FX market, $10, $50 in the stock market. And I'm just trying to take a piece out of the middle. And so really what it comes down to is being a consistent, winner in this business. And really, what does it take? And I think that, that really is at the heart of, certainly the FX business, because the statistics in FX are terrible. It's estimated that over 90% of people lose their money within 3 months of opening up their account in the FX. I think it's probably even higher. And so, the question is, why is that? And there's probably a million answers: psychological, technical, strategy, money management. And it involves all of that. But I think one huge problem is that there's such a tendency for a short-term focus, where we pull up our chair, we open up the screen for a 3-hour, 5-hour window whenever we have some time available, and we try and put some indicators over a 15-minute chart, see where the magic crosses, and try and extract 7 pips or 12 pips out of the market 5 or 10 times a day. Now it's fun, it involves some active management, excitement. You're watching the markets. There's a bump, there's a rush, there's action there. But again, if this was a winning strategy, then I think a lot more people would be winning. And the question is, why are so many people losing? And I think it's really, they're doing battle with their broker, especially in the FX business, where, the broker's charging 2 or 3 pips in the spread. It's a disguised thing. When you see the euro trading at, 119.70 by 119.73, you're paying the broker those 3 pips. And if you're in and out of the market 5, 10 times a day, even though, you don't see it, it is a cost. So instead, what I like to do is hone in on markets where I can see that there's going to be a setup, and then I can just sit in that. Now, they don't come along every day, every week, every month. And that's actually the problem with doing these webinar series, because 3 weeks ago when I did this webinar series, the NASDAQ was cratering. And I said it would. I came in short the NASDAQ February 19th. I think I showed you some of my trades where I started looking at this pattern on February 19th, this ascending broadening price pattern, the key reversal, and then started doing a bunch of trades. And then, the following week I did the same thing. And then it was a very exciting webinar series because I could say, hey, look, the NASDAQ's going to crash. And then every day I'm showing you what's happening. So, in the first week I made, $400,000, in 2 accounts, buying these put options in the NASDAQ. And then I came in, the second week for one of these webinar series. And, I was saying the same thing. This market's going to go lower. And on Monday, when we first started the webinar, the market went up, and I lost 24,000. By Tuesday, I was up 142,000 in my positions. And by Thursday, I was up 348,000 and didn't count a whole bunch of, things that I already took profit on. So I can't time these webinar series. Right now, the markets are just digesting a lot of volatility. There's been a lot of huge moves, especially in the stock market and these yen trades and certain things, but there's always opportunities. It's just, this is not a magic show, so I can't invent things. What I try and do is show you how I hone in on opportunities like this gold trade, where I saw a certain pattern, the same pattern that I saw in the NASDAQ. It's called an ascending broadening price pattern. This was the email that went out to our members on January 10th, where I, advised to put a sell at 1867. And my target objective was $1,700. Now, again, this was $170 objective. And so we don't get those all the time. The markets are always in different phases, but there's always something that's setting up, to put on a move. And what I'm trying to do is just take a piece out of it. And it turns out I took a pretty good chunk out of this gold move. I started getting in the mid 18s, sold some more at the high, 1700s, again, looking for, a strategic objective under 1700. And this is where I took profit. So you can see I got in at 1841 on one position, 1795 on the other. And I got out at 1687 on a take profit, which was exactly my objective. I said the market was going to come between 1650 and 1700, and it went to like 1671. Now we've been talking about the pound New Zealand. I talked about it yesterday. I started entering this market at 193.37. And today we got a major, slap in the face. I thought that we would have, some kind of, consolidation here, but this thing looks like it's going to turn around. We'll take a look at it. But you can see I got in 193.37. And even if I get out of my trades at 196, I've still made 270 pips on this trade. And that's really what I'm trying to do. I'm trying to just take a piece out of the middle of trades that extend from one range to another. So those are my open profits yesterday when the pound New Zealand was 100 pips higher, and now they're a lot lower. And we'll go into that. I talked about Zoom. I'm always shorting Zoom. KTOS was a stock that I was looking at, and I'll look at KTOS now. I think KTOS could be setting up for another move to the upside. I was advising to buy around 30, 33 bucks. And you can see I bought a whole bunch of calls and made 47 grand on that bet. This was really my big bet that started about 2 months ago, that started me on a massive winning streak. Sometimes, you go into a process where you can't do anything right. And before I did this trade, I was down about 15% of my account. I was buying Lyft early, and, I was buying IBM early, and, then getting out, and, then I accumulated like a 15% loss. But again, to me, I understand that trading is just a process. You're not going to win every day or every week or every month. And, I factor in that I'm not going to win for, maybe half the year. I win a lot more than that. But all I'm looking for are perhaps a half a dozen trades during a year that are going to make my entire year. Sometimes it just comes down to 1 or 2 trades. And so this was one of them where I identified a sweet spot in Lyft where, I saw a long-term double bottom, then I saw a short-term double bottom, a little inside day bar, I started buying the stock. I started buying the calls. I just went to town, feasting on what I thought was an enormous opportunity. And these were, some of my transactions where I bought 7,500 shares around 46 bucks and blew them out at 58 for about a profit of $90,000. Then I also bought these, calls at less than $1 in lift at the $46 calls. I blew out of them at $7, made about 760% on those. So then I also bought the $47 calls for $1.10, got out of them at $6 and made a 454% return. So this is what I am looking for in the markets. Does it happen every day? No. Does it need to? No. If I'm making a couple hundred grand on certain trades, and my put trades, I made even more than that recently. I don't need that. So really what I do is, look for opportunities in the market. It's like kind of playing a detective where you're always looking for opportunities. And to me, the bigger opportunities have really been in the stock market recently. And I'm kind of seeing certain things going on in the stock market right now that, could translate to, some decent trades here, both up and down. So, I look at, trades, whether they're going up or down. I don't really look at the market index themselves. You have trades that, are working irrespective of the indexes. But I just want to share with you what's going on with these indexes. So this is the triple Q, which is the, and I'm going to hone in on a short-term trade. So this is about right. So this is the QQQ. This is an ETF that completely mimics the NASDAQ. So if you want to trade the NASDAQ and have an aggregate and a composite, you would just get long the triple Qs. If you didn't want to pick an individual stock, you just want to find an ETF. This will mimic the, the NASDAQ one for one. Similarly, if you want to short it, there's something called the SQQQs, which are an inverse indicator, or you can buy puts. And so let me share with you. So I think I told you yesterday that I was doing a webinar for our elite members. It's called the Master Pattern Series. It occurs every Friday at 11 a.m. Eastern time. And, I was doing my analysis, for the group. And, when I was doing my analysis, I came to the conclusion, in this time period right up here, that there wasn't, one bear price pattern. There was actually 4 that were all coming together. So what I was looking at right here was what appeared to be like the culmination of what we call an ascending, broadening price pattern. Now, this is called an ascending broadening because it goes higher during the pattern. It starts out life in the pattern narrow and then widens or broadens out at the top. So it's an ascending, broadening price pattern. So I was looking at this on the, this is the daily chart, but I was also looking at it on the weekly chart. And so this is the first pattern that I saw. Then right at the top here, I saw this double top. So this was, I should have done it all the same color, the second bear price pattern. Then I also surmised that this was a head and shoulders. So now you had 3 bear patterns. And then just to finish it all off, right here, you can see that this has a daily open and close. It's not a continuous chart. So you can see right here, this portion was orphaned. You can see there's 2 gaps here. And so this created an island top. So I had 4 bear price patterns. I'll kind of redraw this. This is, very messy. But I was kind of doing this for, the group on February 19th. And, I went kind of out of, kind of ballistic after that. I kind of, finished off at around 12:30, 1 o'clock. And I guess I did such a good job, convincing myself that I just loaded up on these triple Q puts, right here. So that was the weekly low. So I saw the double top. I saw the ascending broadening. I saw the island. So what I mean by an island top, you can see that there are two gaps here. So this, has an opening and a closing every day. It opens with the market at 9:30 a.m. Eastern time and closes at 4 p.m. Eastern time. It's not a continuous thing. And so effectively, you have this island up here. Can you see that? Where you just have all of these prices separated by these two gaps. So it's called an island top. So I saw effectively an aggregation of 4 bear price patterns all, coming together at once. And then on top of that, I look within the pattern. So when I see a pattern forming, and I can see it very early. So to me, that already, and somebody say, well, it's talking that the lows can be, in different places. It doesn't really matter. So, but when you look back, what you see is this M top. Sometimes the second high can be higher. Sometimes the second high can be lower. In this case, it doesn't really matter. What it is that you see an inability for the market to go forward at a key area here. Now, in addition to what I perceived as a double top, what I really look to is for the market for verification. What I mean by verification is that these key reversal price action, you can see that when the market made an all-time new high for the NASDAQ, by the end of the day, it closed on the very low. Not on the very low, but towards the lower end of this bar. And it did the same thing right here. So these bars, they point in the direction that the market wants to go. It could be argued that perhaps today we had a key reversal, made a new high, close on the low, right in this resistance level. Now, it'll probably take a couple of, market just doesn't go straight down from here. It may take, one more where we might see, tomorrow look the same thing. And then we have the beginning of what looks like a resistance zone that then could push the market back into, this level. And I'm surmising very much that this could happen. And I'll share with you in a moment. But I just wanted to show you what I was seeing in this time frame right here, where I just lit the candle. I lit the rocket, where I started, and I did this on multiple accounts, where I started buying these 320 puts when the QQQs were trading at the all-time high around 334. So I was 14 points out of the money, which is a long way. It's about a 7% move. And I had to be correct by the very next week. I put these on February 19th, and they were expiring February 26th. And I bought 350 of them, and you have to multiply this price by 100 shares because it's based on 100 shares of underlying on each put. So this was actually a $35,500 bet. And I did the same thing in another account. So I put about 80 grand, into these options. And if I was incorrect by the next week, that 80 grand would have gone into the toilet, would have expired worthless. And, this is basically what happened. I bailed out at 585, 575, 631, and 810. So between 600 and 800 times my money in 2 days. This was on Tuesday. 2 market days after I put the position on, I made 560% in 2 accounts. And then I rolled it again and did it in the same week forward. Because you can see that, it kind of went down in this week and then went down in the second week. And so I did a double roll, and I got in here and I got out there and took advantage of most of that move, most or all of that move. Even though I say, all I'm looking to do is take a piece out of the middle, and this is fine. If you can take, bet from 328 to, 310, and have a position on, you can make yourself some money. What I'm not trying to do is trying to guess, where this is going to go in the next 15 minutes, on some magic crossover using some Bollinger Band and volume and indicators. All I needed was exactly what you see in front of you. This is what's called a clean or a naked chart, because you don't see anything here. There are no moving averages. There are no Bollinger Bands. There is no volume. these are what are called leading indicators. And to me, that's like driving, looking in the rearview mirror, because indicators are based on historical information, past information. The market is about the future. And that's why these things don't work. You buy these expert advisors, these robots, they, show you all of these winning track records that go to the sky. And then, you blow up your account 3 weeks later, 3 months later, but it's a guarantee they will blow up your account. They will encounter a market that they just don't, recognize and then blow up your account. Instead, this is obviously a human thing, but I'm using, objective empirical information, price information, price action that the market is giving me. So Costa says on YouTube, the island top and the QQQs gave a measured move down. It was perfect. You don't have to explain anything more than this. So this is what I look for in the markets. I look for setups that translate to moves. And, try and take, as big a piece as I can. As it turns out, I got every bit, on this thing. I got in here, and I got out here because this was like 300 on the QQQs. And you can see it went a little bit below there. And, I said, you know what, I'm just going to take this profit. There was, some support right here. And I got out right under 300 in the triple Qs. And, it's one of the nicest bets I've made in a long time. And I made 7 figures in 2 weeks. And so this is what's possible. Is it possible every day, every month? No. Sometimes the market goes into this, where it's just a chop and it's up, down, sideways. And so, it's just a question of patience, discipline, waiting for your setup and, looking what's going on. So now we have an opportunity where, I think that we are, in this major resistance zone, whether it be here, whether it be, a little bit higher, whether it be, a week from now, 3 weeks from now, I think that we are close to being all in. So the market is a discounting effect, right? And we've had just a Goldilocks economy, just a perfect trifecta of stimulus from the government, stimulus from the Fed, the reopening, the vaccine, everything. You've had great job numbers, you've had great sales numbers, everything has been fantastic. The problem is those numbers are about what happened last quarter. And the market is about, okay, so what are you going to do for me now? Okay, you've shown me these great, past numbers. I've discounted in that we're going to have a 7% GDP. I've discounted it, that we're going to have a $10 trillion stimulus plan. I've discounted the fact that we're now getting an infrastructure plan. And so now what are you going to do for me? And so the market is a discounting effect. So we can look at the news, get caught up in all the excitement, but the market is about, okay, what are we going to look like 6 months from now, 9 months from now? What's going to happen when, perhaps all this inflation kicks in or, some other unintended consequence. And so I don't think about all of that. I just look at the market. So this is the S&P 500. Maybe I should just take this out a skosh. So now in the S&P 500, I've been watching the same thing that I saw on the NASDAQ. Let me just blow this up a little bit. Where you have this ascending, broadening price pattern. Now you can see that maybe we got one more shot up here, 4,200, 4,400. But really what I want you to focus on is this guy right here today. Look at the range of today. So that's what I call an inside bar or a narrow range bar, where you can see the range from high to low was infinitesimal. And these look benign, they look innocent, but to me, they, are a coiling of energy, an aggregating of energy. Now, the energy could uncork upward or lower. And, I would still say we have room, perhaps still on the upside to 4,200, 4,400. But we are still trading in the, same ascending broadening price pattern, which to my mind says that we're going to at some point come back here. And this could be the start of it right here. So like I said, these things I've seen many times where it looks like nothing, where that thing just, you don't even take it seriously. It's just one of these days where the market did anything. And then you look back and that was the reversal. Now, I'm not saying this is going to be the case this time, but it could be. And so what I try and do is I put a structure around prices. And then what I've learned, and the nuance that I've learned, is that instead of having a fixed mentality as to what this thing is going to do, so I think this thing is probably going to, go like this and go like that. And if the market starts doing that, then, I'll start aggregating positions, consistent with it. But what I do is I put a structure, I put boundaries around prices. Prices form all kinds of patterns. And I love patterns. That's why I'm the pattern trader. I just see patterns everywhere. And you can see how the market does correspond to these patterns. How I made 7 figures looking at an ascending broadening price pattern with an island top, with a double top and a head and shoulders. All of those are patterns. And so, there was nothing in the Wall Street Journal that was going to tell me that there was a 15% move going to happen, at that time. So the market tells you what it wants to do. So what I try and do is then look at this and have some kind of visualization. So there, and what I do is I game out certain scenarios. So what's going to happen tomorrow? Do we break the low? And do I just put a sell? Can you just put a sell stop underneath this low? And if it's triggered, maybe that puts you into a terrific move. Or a couple of other things could happen. We could, open higher and start coming through unchanged and go through the low. Or we could just, gap higher, where this is just a consolidation. It's a storing of energy, and then it just gaps higher and, keeps going higher. So there are, a number of scenarios that can happen around here. And what I then do is I use the high and low of these bars to game out certain scenarios. So what happens if the market breaks the high? What happens if the market breaks the low? What happens if the market goes higher and then comes through even unchanged? Unchanged is where, the market closed, which is very close to the low. And so, I will look at certain things and, if this thing, starts going higher and then failing, and, I will just put a sell stop underneath this low, and, you could have one of these. So this is what I try and do. I just look at the market from a price action standpoint. So here you have both a pattern, an ascending broadening price pattern, and now you have this price action where you have this narrow range inside bar, which in and of itself is not definitive. But, I would argue that I have seen so many moves that start with something that looks like this. And, and you look back there and, the market's there, and that's how it started. So, I have learned not just to ignore these things. You can see here was an itty bitty inside bar right there. And, you had a nice move off of that. And this is a good example where exactly what occurred right here. The market made an all-time new high. And then the following day, it stalled out. So to me, this inside bar represents a stall where, it couldn't make any more headway. So yesterday we made a high, today maybe we went a little bit higher, but we just couldn't push through, right? So there was no follow through. So the momentum is starting to stall at the top, right? We've had so much stuff pushing this thing uphill. And now, if you get a stall, all of a sudden you could get one of these. And the Dow Jones looks the same. Actually, the Dow Jones looks somewhat weaker. So here you have the potential of an island top up here also in the Dow Jones. So let me just So before I go any further, are there any, comments or any questions? Questions coming so much. So Luis says your insurance day bars are like dojis on a candlestick. That's true. And, I prefer to use bar charts. I'm old. I'm just used to doing whatever I do, but I just see, these things very clearly. I just see the bars very clearly, so when, this makes a bottom here, makes a new low and close on the high, I just can see that, candles, I guess it's just a matter of whatever you're used to doing. And, life is a function of habit. One is not better than the other as long as it works for you. I'm not disparaging anything. If you have a system that, is predicated on the cow jumping over the moon on Wednesday and it works, good luck to you. I just love looking at the market through the prism of these patterns. And you can see how linear, these things are, where these things pull back to almost the same areas and then they observe the same areas. And so you can see that we're huddling at the top end of this ascending, broadening price pattern. You could argue that, this looks like, it could be a double top. If this thing kind of makes its way back here, you're going to look something like that. Now, this hasn't happened yet, but I start just gaming out certain scenarios. But what I do see is these two kind of narrow range bars right up there at the high. And today we couldn't push through. We stalled, and you could see we closed on the low of the day. We didn't even make it to the highs. You can see that yesterday made a new high. Today we couldn't even make a new high, and then we closed on the low. And so tomorrow, if we gap open, now you're going to have something that could look like an orphan up here in terms of an island up there. But you are huddling very close to the top end of this resistance. So we could still push higher, but I would argue that, we're coming into an area where, there's going to be a reckoning. And it may not be big. It may be just, something that where now we just, are going to go into a prolonged, consolidation where you get these. And, the market does that. The market does go into these phases. So sometimes somebody signs up to my program and they're all excited. I show them a great trade and they're all excited. And then, 3 weeks later, it's like nothing's happened. They go, oh, this guy, I'm going to unsubscribe. And then as they unsubscribe, I guarantee I'm going to go for one of these. So, the market is a process. If you're not looking at it, through a prism of, every 15 minutes trying to make money, you have to, look at it as a process. And again, what I'm trying to do is capture, the big moves or the middle, the piece of the middle out of something. So if we get one of these, I just want to take a nice chunk out of the middle. John says, would you give me a good email where we can sign up for the elite group and maybe ask a few questions? Sure, John. I'll do that at the end. I will give an update on the pound New Zealand dollar for sure. I just wanted to, this is what's happening in the stock market today. And when I see these little narrow range bars start aggregating at the top, what I mean at the top, when you've had a major move and all of a sudden the move starts stalling, there could be an opportunity here. I actually bought, some puts today. I bought the 329 puts, and the Nasdaq's what, 330? What is it? 330.80. I bought the 329s just for a giggle. I mean, right now, actually, the market, just doesn't seem to have a lot of volatility, and so, you may, and again, the market usually doesn't end just with one reversal. It will require, some work in this area just to give it up. But that's what I'm looking at, these narrow range bars. But like I said, this is a market of stocks, not a stock market. There's a bunch of stocks that are going up, a bunch of stocks that I think are going down. Two stocks that I'm looking at right now, very unsexy, off the radar. This one, KTOS, which I looked at a while ago. I made a bunch of money on the call options right here, where I thought we would make a run to a new high. Right at this area here, I bought the $32.50 calls, and what I liked about them was they gave me about 6 weeks to sit in them. Usually, these options expire the next week, and I bought these things at 1, and I blew them out at like 4. As it made a run to $34, it was actually got in the money. So if you look at the weekly chart on KTOS, it's let me drill it down even a little bit more. So what I try and do is try and look for opportunities where I see that there are setups that are going to translate into moves at some point based on the underlying. So this looks a lot like silver. We had this kind of inverted head and shoulders, and this is what silver looked like when it went to $11 and then cracked above $20. Looked exactly the same. And so this is what's called an inverted head and shoulders price pattern. Looks just like, so a man or woman's head and shoulders looks like this. So this is, and these are reversal price patterns. So in the case of this is called a head and shoulders. And what this pattern means is that up to this point, the market was rallying. Then the market traces out a head and shoulders price pattern, which is a reversal price pattern. So it means that prices that were going up are now going to reverse and start going the other way. So these are reversal price patterns. So for a long time, KTOS was kind of going sideways to lower, and then it hit this reversal price pattern, this inverted or upside down looking head and shoulders. And then some time ago, it crossed the neckline right there, which is simply a line drawn through the pattern. So when it crossed around this $20 area, this signaled that there was, a good opportunity to buy this thing, and it went to $34 and you had a pretty good ride. Now, consistent with most patterns, when you break out, sometimes you retest this breakout area. And when you retest, that's when, it really can get strong. So what I'm seeing here is a retest. And this double bottom on this weekly chart, you can see we kind of broke above this neckline here. And now we've kind of got this inside weak bar where you can see right now, and it's only Tuesday, so we'll have to see how this week ends. You can see that the high and low of this bar is residing within the high and low of that bar. So we have an inside weak bar. So to me, again, what these inside bars are is just a coiling or storing of energy. And then by virtue of the prior patterns and direction, I'm going to surmise that the energy is going to burst out in that direction. Now, this may just need a little bit more time, but this is on my radar. When I see these underlying patterns, at some point, these stocks are going to move. So now I'm going to break it down to the daily. And so that double bottom you saw on the weekly, you also now kind of see it on the daily. And really what I'm trying to do in these sessions is just show you how to look at markets from a price perspective. Try and just blunt everything else out, take the news out, don't go in internet forums, don't chat with your friends. Price is the only thing you need to know. So here we have something that, is a bit funky. There's like a lot of stuff going on. So in one sense, you could say, hey, isn't this, a head and shoulders? Well, it was, but you could see that when markets don't go according to what it looks like, very often they'll go the other way. Very simply stated, if a market's not going to go down, it's going to go up. And so, yes, sometimes we see patterns. And that's why I look to, the long-term pattern where I saw the inverted head and shoulders here. This suggested that this one was going to go higher. And that's why, I wasn't faked out by this head and shoulders. Now, the pound New Zealand dollar did the same thing. And I'll show you that in just a moment. And we call these things busted price patterns. So yes, you could say, hey, Mark, wasn't this your head and shoulders that you showed us? Yeah, it is. But this is what I was saying. I put my structure or boundaries around prices, and then I observe what happens. So I can say, hey, this is a head and shoulders, this is a bear price pattern. But if the market, starts going the other way, what am I going to say? Hey, market, you're going the wrong way. We're down here, buddy. So what I would look for is that, if I thought that was a head and shoulders, this is what the corresponding price action should be. But instead, the minute it started breaking out here, I knew something was wrong. And that's called a busted chart pattern. And sometimes something that, is supposed to go one way and it doesn't, it means that it's going to go the other way. So I know I'm throwing a lot of stuff at you. I'm just trying to, get you to appreciate how you can look at the markets to, understand, how to get a leg in or a foothold on some of these bigger moves. And that's really what I'm after. The moves that extend. When I see a double bottom and a key reversal, even that move from 25 to 28 bucks is a decent move. What I'm not looking for is a 30-cent move on a 15-minute chart. So here is what I think is this double bottom. You had a breakout, a retreat, a retest, and now you've got this inside bar. And very simply, the way I would play this or strategically handle this is that I would put a buy stop right above today's high, 29.25. 29.25, I think, was the high. So you could put a buy stop at 29.30. Although there are these, huge guys right there standing in the way. But, are you going to be right every time? No. I showed you the pound New Zealand yesterday. It went completely different than what I said. I still got 280 pips on my core underlying thing, and I'm going to make some money on it. So it doesn't matter if every trade is not going to work. But if you buy this at, 29.25, and then all of a sudden it's sitting, on new highs at $37, that's how you make money in the markets. Does it happen every time? No. But if you apply the same skills and methodology, all you have to do is tag a couple of moves a year and then sit back. Instead of staring at the screen until your eyes bleed, trying to carve out 15 pips, and play, a game of possum with your broker. And guess what? Your broker's going to win. So KTOS is one stock. I'm also looking at WRK. This is a very sleepy stock, but I love the price action of this. So I'm going to start with the weekly. And so this was like Lyft, and I was telling my wife, for months earlier in the year, I really love Lyft, and everybody was talking about Uber, so, but I said, I can understand the risk reward. And that's really what it's about. It's understanding where can I get in, where can I establish a foothold, where can I establish a position, what's my objective and what's my risk. And if I can come out with a good calculation, then, I'll load up the boat. So for me, this is WRK. I think it's called West Rock, whatever. I think it's in the business of granite or something. I don't really care. What I care about is that it has a very definable couple of, bullish price patterns in the form of this double bottom right here. So made an all-time low, bounced off the low, retested the low. And when we come through the neckline, that was your confirmation right there. 33 bucks. You're now at 53. Now, in addition to this double bottom, this also has an inverted head and shoulders, just like we saw in KTOS, where you kind of have this left shoulder. This is the peak. That's the right shoulder. And, this is like the neckline. And you can see we broke above this neckline, retested it, and now we're heading north again. And I would put everything I have on this thing. To me, I don't see any risk in this thing. It's sleepy. It really hasn't done anything. I've been, I've had this on our members' radar for 3-4 weeks. I started telling them about 3-4 weeks, and it really hasn't done anything. You can see it's just been bouncing between 49 and 53. So, 4 weeks goes by, Mark, you haven't shown me anything. I'm getting out, I'm leaving. And then boom, this thing's at 75 bucks without you. So you can see this is also, I mean, we can't really say it's an inside week bar yet because we're only 2 days before the week. But, I think we're going to go and start taking out these highs. So this is, to me, a no-brainer. And this reversal right here is like a stake in the ground. Made a new low, closed on the high. So all of these guys took the risk for you. So now you know where the risk is. You know where your downside is. And I think this goes and makes a new high above 75 bucks. So even if the market comes off, even if I'm right that the Dow might come off from here, it doesn't matter. Certain stocks are going to go up and certain stocks are going to go down. And that's the key, is just to be objective. So you're watching the averages, the market comes tumbling down, tomorrow, and you go, well, I can't buy this thing. This thing doesn't care about the market. It just cares about. So you can see that we're just huddling. This, is what we're seeing on the weekly, where, we're going up against this uptrend. And now you're just, huddling. You've got almost like a double bottom down here and almost an inverted head and shoulders here. And this thing is close to breaking out. And then once it breaks out, there's nothing but $75 in front of this thing. Let me go back a couple more years. So I think we go back to this high. Once this thing breaks out above here, there's like no resistance until $65. So how does that strike you? You think that this way of looking at the markets could help you become more consistent and a bigger winner in the markets? Just let me know your comments before I go forward. I don't know if I'm losing you. So Mustafa says yes. John says yes. Goran. Tanya says, I like it. Ismed, Michael. Andrew says, definitely. Mark says yes. Alan. So Larry says, I feel rich already. Yes, of course. I like that one. Vince, definitely. Jackie, yes. Matteo says, you really are a rock star. Thank you. Cornell, stay on, yes. So Kevin says, better for me than day trading. Richard says, yes. Hartono says, yes. Darren says, when do we start? Nick says, yes. Matthew says, big time. So Nicholas says, yes, very clear analysis, very persuasive. So thank you for that. Sometimes when you just say yes, I don't. So someone wants to look at it on Tesla, and then I'll look at the pound New Zealand. So this is Tesla. This is the weekly chart. This looks, like a bit of a parabolic move, when something goes straight up like this. But you can see that we've got, a lot of foundation in here. It'd be hard to get through this thing. So, Tesla is a little bit of a tough nut to crack. It's in this trading range, as you can see, between 650 and 720. And, we had a bit of a key reversal here. It's small. And so, again, you can see these reversals right here at 720 are kind of holding the show. And so this is, sometimes you have to decide which is the governing price pattern. And sometimes that's not always clear. And, if you're unclear, you have two choices. You can try and trade your way through it and have the market figure it out for you, or you can just wait and just let things clear up. You might have to buy things higher or sell things lower, but at least the ambiguity, is cleared up. So for me, when I look at Tesla, it's not so clear where we are right now, because at this point, you could see here was, a head and shoulders that was going to lead to a down move. And once it kind of punctured, the neckline here, or certainly the neckline there, it portended that there was going to be a down move. And that's exactly what happened, from 835 to 500 bucks. So these patterns can translate to huge moves. And again, once I see a pattern, all I'm trying to do is what? Take a piece out of the middle. So once I can see a head and shoulders, a setup, and get short, I can take a piece out of this thing and make a very healthy cut, a couple $100. So this is what I'm trying to do. I look at a pattern and then I try and take a piece of the middle out of that pattern, whatever that thing's going to do, even if it's a temporary thing. And, temporary led to a move from 900 all the way to 500. So what do I care if that only lasted 3 months and now we go straight up? I'll take it the other way again. So this is what I'm trying to do. I'm looking for patterns and price action that translate to, monster moves and that I can take a nice chunk out of the middle. So now it could be argued that you have this double bottom, inverted head and shoulders, and you're just sitting right at this ridge line. So this is about 720. So this guy here, if you can take that guy out, the high of that guy, and right now he's been commanding the action. It doesn't look like it, but the market hasn't been able to get past that. So 720 on Tesla is key. And then once it's 720, then it's got some air to roam around in. But it has to get through there. Right now it's bumping up against this resistance, and every time it kind of hits it. So we'll just have to see. Now, also, another thing that's happening in the NASDAQ is that all of these NASDAQ correlated stocks were trading along this major trend line. You can see how, every time, we pulled back, certainly here, and then you pull back and then observed it right here. And I was kind of thinking, at this point that if we crack this, then there was going to be a long way underneath there. But you can see we held. So these markets do, adhere to, I don't really draw trend lines, but you can see that in this case, this is a trend line that you have to, be aware of. And certainly if we started coming back down to this thing again, then I would think, third time's the charm. And, once we break through, there would be a lot of, air under there. So, I'm looking at this, huge area here between 720 and, call it, whatever, 600. Again, sometimes I just play, price action. So for instance, if we were to break today's high, which is, I don't know, around 697, I'm guessing 698, I would probably be inclined to buy that little itty bitty, reversal where we kind of went lower, closed above the previous day's close. It's not a real key reversal, but, you're starting to kind of consolidate here. And if price can't go down, then it's going to go up. So, for those of you who are aggressive, I would just throw a tester in there and buy it around, 698. I don't think, once it goes there, that it's going to take out, the low, although it very well could. So what I tend to do is, I put a buy stop here, and then I would put a stop loss somewhere a little bit above, the unchanged here. You give this thing about a $10, room to move. But you could make, $70 on $10. So, I watch Tesla a lot. There's going to be a big move somewhere. And, frankly, the collection of these guys right here is telling me where this thing wants to go. Made a new low, close on the high. Made a new low, close on the high. Made a new low, close on the high. So all of these guys, in this whole area are telling me that this thing wants to go there. So, we'll see. So again, you can just set up a price strategy. And, today is not the clearest. What I like to do is I like to see a clear reversal. So, what I like to do is see a market makes a new low, close on the high. I understand where the risk is, buy it here, and then, see how that goes. This is, kind of very ambiguous. This is kind of nothing. This is just kind of just stalling out at the upper end of a range. Maybe it needs one more pullback. Maybe it needs to come back here where, it pulls back. We get another key reversal here, and then it goes. So, all of these stocks, they're kind of positioning themselves. Things are happening. And, I like those low-lying stocks like KTOS and WestRock that nobody's talking about. So, I think that this is an environment where, the unsexy stuff is, likely to work, the under the radar stuff that hasn't been taken for a trot. Tina says, hey, Mark, when you buy call or put options, you don't get stopped out by a stop loss, correct? But the stop loss is kicking me out 75. Yeah, well, caller, put options or call options, they go up and down, 50% in a day. A small move will send this. So this is a good example where I bought 450 puts, probably around a little over $1. Actually, it must have been closer to $1.40 because I lost like half my money. So you can see that I bought it on a Monday. I bought them at 140 on Monday. By Tuesday, they were 71 cents, and I was losing 50% of my money. I put up 61 grand. I had 31 grand left. I lost 30 grand. So I was losing 50%, in a day. So these things, you can't really put stop losses. I mean, they just get wiped out. But you can see by the very next day, this thing that was at 71 cents was now at $2.66. It went up 400% in one day, and that's kind of the beauty and the destruction of options, right? You can lose all your money in a flash, or you can make 400% in an hour. So, risk and reward. So you can see I was losing 30 grand, and then the next day I was up 60 grand. And then, the next day I was up 87, but I was up actually far more because I had 450 and I took 300 off. So I made well over 100 grand on that bet when I was losing $30,000 at the beginning of the week. So, options are, heartbreak to ecstasy, in about 30 seconds. Yes, you can watch this on YouTube. This is live streaming on YouTube. All right, so let me get to pound New Zealand because I got pounded on this trade. Lost all credibility with you guys. Terrible thing to lose on one trade. And, I got stopped out. I had my stop at, 95.77. I got in at 93.37. I added up here at 96.67. And then, this thing, and again, it was telling me that yesterday you guys were saying, isn't that a double top? And I was saying, I don't think so, because this thing's in a, long-term uptrend. But, that's been the that's really the difficulty of pound New Zealand. It's you can see by and large, it's gone very sideways. But I can tell you, I've taken monster moves out of the up moves and the down moves, even though I lost all credibility overnight with you guys. And so, well, this is where I struggle, where you have to say to yourself, which is the governing price pattern? And what I mean by governing price pattern is, what is the pattern that is going to govern or dictate the market going forward? And so here's the struggle, where you have a double bottom here, rounding bottom. And then based on that double bottom, rounding bottom, I just made a fortune, buying this market. I also, sold it at these various spots. But that was kind of my guiding, pattern. And now you can say, well, do we have this head and shoulders price pattern? And this was an example of the KTOS thing, where it was somewhat of a busted pattern, because you can see right here, we had what looks like an enormous head and shoulders, right? So this thing, once it breaks the neckline right here, now we should be off to the races, right? So now, the market gives us a head and shoulders, this is a reversal, and this is what the market should do. But you can see instead, the market just dipped under that neckline and then trapped everybody. So it was kind of like a bear trap. It trapped all the bears chasing this thing. And, typically when you're trapped, it goes the other way like this. So when I saw this, this double bottom, to me, this is consistent with the long-term cadence that this has been in. And yeah, we're coming off today, but, I don't know. Does it, find a hook and go back? I don't know. What I can tell you is that what I do is a lot of visualization. So I say, okay, let's say it's all over. Let's say that, it's all over on the long side for the pound New Zealand dollar. And if we say that it's over on the long side, then, we could easily say, well, then, this is a short. And should I get short here? And that's, a legitimate question, because you have this, resistance level that it's observing. And so now I say to myself, would I get short here? If I don't think this is going up anymore, would I get short? And, here's the difficulty. Now I've got to envisage that I get short here, right? And then, what I try and do is visualize a move. Once I think a pattern is established, I'm getting in. Now I've got to visualize this happening for me, right? I can't visualize that. Markets just don't cut through all of this nearby price action. So it's got to cut through all of this stuff that took weeks and weeks, to put this thing up. So, let's see what happens. This is, obviously a tough pair, and I just try and take pieces of the middle. And like I said, I got in at 193. It's at 196. I still took 250 pips out of that trade. Not exactly a complete heartbreak. And so, I try and sort this out for myself, because if you look at the monthly of the pound versus New Zealand dollar, this thing is in a long-term downtrend. But also consistent with that visualization, I say to myself, okay, so now can I see all of this? Can I just see prices just going through all of this like that? The answer is no, I can't. Here on the weekly is this double bottom that I saw, and that rounding bottom. So this is kind of like been, kind of a little head and shoulders, but clearly the trend for pound New Zealand is clearly down. I mean, if you look at the long-term trend, this thing is going a lot lower, or has been in a profound downtrend, right? But trends end, and when they end, they put on patterns. And to my mind, that little sneaky double bottom, put in a bottom on this thing. I don't think you're going to see this thing taken out. So that means over time, this thing's going to figure a way to do something. And the whole thing is over time. That could take weeks, months, whatever. But, I also look at, so I see the double bottom there. And then I also see this collection of price action where it made a new low, close on the high. And then right here, these two bars, consistent with the double bottom on the daily and the weekly, you also had on the monthly. You had a double bottom, and both times these things made new lows for the month and closed on the high. And so you have all of this kind of foundation. And, you're just in this, area where there's a ton of resistance. And so I just feel like, pound New Zealand will eventually sort itself out and go higher. And so I just try and take pieces out when I think I can get in where, what I try and do, and you can see already today, we made a new low and we're going up into the range. I'm telling you, this thing's not over. I don't think it's over. I think this is a freaking buying opportunity. In fact, I'm going to get off this thing and buy some. So to me, that pattern is still the guiding pattern. And yeah, I mean, you hit this resistance area and you've got a lot of turbulence here. And that's what markets do. They just flush out the weak hands. And you can see this thing is not easy. It gets boxed in these things and just goes into these crushing kind of. But hey, it's not easy to make 1,000 pips in the market. Nobody said it is. I'm going to show you something. This was a couple years ago where I was so bearish on the dollar yen. I've been talking about the bear side of the dollar yen for a long time, for anybody who's listened to me for any period of time. And so this was an example of a trade that I sent out actually April 23rd. It only got triggered on the 25th, 2 days after the sell stop was triggered. So I had a sell stop at 111.61 and a take profit at 105, so 650 pips. But it took me 3.5 months of sitting in this thing, April 25th to August 12th, to make 300 grand. And you can see I did a bunch of other things and made a little bit more money. So, you know, what I'm trying to say is that these markets, like pound New Zealand, you know, they don't go straight somewhere. Sometimes you just got to sit through, you know, turbulence. And, you know, people always say, well, Mark, I don't understand how you can do that. You have the balls, you have the courage. And to me, it's just understanding, you know, what charts are. So this is the weekly chart of the dollar yen. Hang on. Whoa. I'm just trying to see. Okay, so it doesn't, there you go. And I wanted to talk about dollar yen anyways, because, you know, again, I think we're at a moment of truth on dollar yen. So dollar yen has been in a 10-year downtrend. We're trading at 109. This thing was actually at 350 yen to the dollar. I don't know when it was, but that's how far we've dropped. And that's how profound a downtrend we've been in. And that's why, you know, I think that, you know, dollar yen is just doesn't have a lot of, you know, sustained energy to the upside. But we are, you know, kind of at, but so let me kind of get back to this trade that I did a few years ago, where I saw this huge double top at 126 on dollar yen. So this was my governing pattern. When we see a top, it means the market has topped. And, you know, if the market's topped, what is it going to do? It's going to go lower. And it went from 126 to 100 over 5 years. So sometimes, you know, I look back 5, 6 years for the pattern that is governing the market right now. And that's why you cannot see these things on a 15-minute chart or a 4-hour chart. In addition to the double top, you also had a head and shoulders. So this was my cheat sheet for dummies for dollar yen. This told me, you know, what dollar yen wanted to do, you know, over time. Now, were there a whole bunch of times where this thing rallied like a mother? Yeah. But, you know, I knew that every rally would exhaust itself and go lower because the governing pattern told me that. And then after the double top head and shoulders, we had this descending triangle. It's just this sawtooth thing, a buzz saw that just, you know, just makes lower highs. Every high is lower than the other one. And then eventually it looks like that. So once I understood what the game was by virtue of these patterns here, and then, these set of lower highs here, I kind of understood what the game was, so that when we rallied hard from here, to me, this was just another opportunity where, I saw this area that was a double top right along this descending trend line. So while I surmised it was a top, this was so this supports exactly what I was saying about the S&P and the Dow Jones. So this looks very benign, very innocent. You can see that there is a very narrow range bar right there. So this rallied from 105 all the way to 112 and then put on that narrow range bar. And I said, you know what? This thing's going to stall out right here, and it's just going to go back in the chop. And that's exactly what it did. So based on that narrow range bar, just like I was showing you on the S&P, I started setting up my trade and I sent this out to our members to put a sell stop right there at 111.61 on April 21st. And what happened was market opens on a Sunday and it goes up. And if it kept going up, my sell stop would never be triggered. No harm, no foul. I go on and find some other move. But what happened was the market went up Sunday, Monday, Tuesday, and then whatever. Tuesday at 2 o'clock in the morning while I'm sleeping, I get triggered into this trade. And then I never look back. I never was in a tick of heat. I never was in any kind of loss. But here's the conundrum we have as traders. So I get in this trade, and all of a sudden I have a 250 pip profit, on 51 lots. It was a nice looking number. But then all of a sudden the market goes up 150 pips. And now now it's very easy to say, hey, I don't want to look like an idiot, give back every cent of my profit. Let me just get out of this thing. But I kind of felt that we were always coming down here. I was saying to my members all the way up here, just like I said, with that gold was going to 1700 when it was at 1900, I said, this thing is going to go back and retest these October lows at 104. And I'm holding out for a good piece of that. And so I held out, it went up, it did another reversal. I got more in here, then it went down, and then it made this key reversal here. And I saw that guy. I saw that key reversal, and I'm going, you know what? That's going to hold the market up for a while. I'm still short, and I'm paying the swap fees. This thing's going to hold it up for a while. And for 7 weeks, this thing went, sideways to higher. So I could have gotten out there, and now I'm looking at it here, on multiple lots. And I said, you know what? I'm just holding on to this thing because I just feel that this is the pattern. It's just in this sawtooth. I can draw these patterns in my sleep. I think I can anticipate where it's going to go. I mean, it sounds arrogant, but anyhow, that's what I did. And you saw my trades, and I held on for 3.5 months. I got in here April 25th. I got out here August 12th. So that's why I would say, just because I'm doing it doesn't mean you can. Because a lot of people can't just gut it out for 3.5 months in a trade. But I've learned if you really want to make big money, that's what it takes. Now, I would have made, fine money, here, or even here. I could have taken it off and made, like I said, taken a chunk out of the middle. And typically, that's usually what I try and do. Get in here, get in somewhere here, and take a piece out of the middle. Some say you can't get in, at the very beginning and at the very end. I got every piece of that trade. So now that we're looking at, dollar yen, I've said for many weeks now, we're at, kind of this inflection point. Does it look like there's, now a paradigm shift where the yen pairs are kind of, going to go counter to what they've done for decades, where the yen is going to start going weaker. And you can see we've got this breakout here, but I was always, cautioning our members that, you could get, you always have these fake outs where the market breaks these levels, and once it breaks, everybody piles in. And so this could be, just a bull trap. where if you chase this thing, now you're trapped. And so again, we are at a very big inflection point as to whether this thing's going to start coming back into its long-term pattern, or we're going to break out. I think it's the former. I think we're going to come back into this, although euro yen looks pretty strong right now. So we are right at these resistance levels, and it's going to be very interesting to see how things play out. And like I said, when you're a little bit unsure, just allow a little bit more price history to occur, and the market will tell you where it wants to go. So right now we're looking at this inside bar week, where the high and low of this week sits within the high and low of last week, although this week is far from over. So we'll have to see where this thing kind of rests. But I have, every rally I've shorted into it. I'm not short right now, but I'm thinking about it. And again, just like pound New Zealand, just because I think it might go lower here, I then now have to visualize, if I get short, can I see prices just going like this? And I can't see it cutting through all of this stuff that, it's been going up against. Now, there's a continuum to prices. There's an aesthetic, there's an architecture to it. The markets need to kind of build a pattern and space. So just like a market starts with a pattern, it has to end. So it doesn't just drop right out of the sky like this. So I have to see something, else going on here, some more history, and time will tell. But I think that we're, again, at another inflection point where every time this thing has come up into these areas, I've just smacked this thing down and made a lot of money. And this may be another one of these. I just think it needs a little bit more time to develop. All right, guys, I think I'm gonna take some of your questions here. I've I think unloaded a lot of information today. Appreciate any. So Michael says, thanks. Always a great presentation. See you tomorrow. Daniel wants to look at the QQQ weekly. Andrew says, awesome presentation. I appreciate that, Andrew. I really do. I try. QQQ weekly. And that's a smart question because, these long-term really put in perspective. So you can see that still looks like, we could re-challenge these highs. The path of least resistance on the weekly is higher until proved otherwise. Again, we are adhering, like Tesla. This is what the NASDAQ's been adhering to, this long-term ascent, uptrend line. And you can see, every time it pulls back to this thing, it observes it. So now let's just see how long, we can stay in this, this channel for. So, you kind of got this channel going on. And so again, we could be just in for a lot of just back and forth. It's, two scenarios that I can see. We're either going to, kind of fall from here, or more likely probably just go into some kind of, sustained sideways. I mean, the market, this year has just been, on fire because of all of the ancillary stimulus in this. This has just been a parabolic market. Typically the stock market, you go through periods like this. That's normal. This is normal, where you get, months or if not years of just, backing and filling. And I think at some point, this momentum is going to start slowing down. So again, I showed you there's KTOS, WRK. These are stocks that I think are going to go up, independent of whatever the market environment is. I like WRK very much. I think that's just a sleeper. And you could just wake up one day and it's at 65 bucks, 75 bucks. Osama says, amazing. Can we use this system to analyze price action in intraday ranges, like applying hidden to the price going up or down tomorrow. So again, to my mind, when you're looking at an intraday range, a 15-minute chart, you will see double tops. You will see head and shoulders. You will see all of this stuff, but how, what does it really mean? So when you don't have perspective on something, yes, you can look at things. And the problem is it then invites you into more trading, over trading. You're doing more trades all the time. And you're not really looking at the big picture. You're just trying to sneak out moves from here to there, on some 15-minute, changeover. And yeah, I mean, can you make money, trying to, take some, out of this? Yeah, you can, but can you do it on a sustained level where so here was, clearly a double bottom. And, if you just saw that on a 15-minute, but you probably wouldn't hold it. You'd get out here, or you get out there, or you get out there. What I look to do is see a pattern like this on a daily or a weekly, and then sit in that trade and then take a piece of the middle out of this. Now, can you do it on the 15 minutes? I mean, here it shows you could, but look, I did all of that. And it was just I was a commodities trader. And, I'd make all my money, before noon. I trade copper and all this stuff. And then all the commodity, I was living on the West Coast in Los Angeles. And all the commodity markets were closed by noon, except the stock indexes. So I'd make all of the money in the morning trading, copper and soybeans and whatever I was trading. And then I, hop on a, 15-minute chart, for the stock indexes and donate it all back. And, it was just this repeated pattern that I was in. I mean, I always had, a knack for making money in the markets. I always saw these big moves, and then I would make big money and then, just say, okay, I've made money. Now I've got money to play with. Let me go and pull up a 15-minute chart and have some fun. And then I'd end up donating it all back. So, for me, I built this methodology as a firewall for my patterns, the demons that controlled me, and, how to overcome those. I've developed this 4-step trading methodology. So let me actually share that with you. Sorry, let me just get this. So I'm just going to put this link in the so I put all of this into a book that you can pay for any price that you decide you want to pay. Literally, it's a pay what you want. Sorry, I'm trying to access this thing. Let's pull it over here. Oh, great. I'll put it up tomorrow. I think somebody asked about the elite. So I'll put that up today if you want to know a little bit more about the elite. There is a video here. There's, everything we do. So Osama, I'm sorry. My team obviously took it down. I'll make sure that I have it for you tomorrow. I have a book. You can pay anything you want, and it sets up this 4-step trading methodology. So I put this link in. I think, did I put the link in here? Let me just put this link in the chat box here. And if you haven't seen it, you can check that out. There's a video there, and it basically explains, how to access my information. So Vladimir on YouTube says, how do you decide which pattern will influence your move? Now, that's an excellent question. Sometimes I see that very clearly, and then I just pile in, I'm all in. And then sometimes it's a little bit more nebulous. And let me just peel back and look at some more data here. Actually, I think this is okay. Actually, before I look at the euro yen on the weekly, let me look at on the monthly. So just to give you an appreciation of sometimes, kind of sorting it all out. Like sometimes, there are patterns, there are certain setups, and I just see it and it's a layup, like, LY lift, just like there's no ambiguity there. And then sometimes we get into areas of the market where, the market throws us a lot of different curves. The markets throw us, patterns all the time. And then you have to interpret what is going on here. So this is what I'm saying, that the long-term secular or primary trend of the euro versus the Japanese yen since 2008 at 170, we're now at 130. So it's been lower, right? And you can see now how we are clearly at this inflection point where we're literally sitting on this resistance line, this 10, 12-year resistance line. And then if you draw another line, you kind of are in this perfect symmetrical triangle. Now the question is, and the real question is, the money-making question is, is this a breakout that's going to do this? Or are we going to crap out and go back into the chop and the trend? I kind of still think it's the second, that, we'll hit a bump of resistance here and then, turn back. But, I'm clearly willing to be wrong. And if I'm wrong, I'm going to make a lot of money following the market wherever it wants to go. So I have this saying, it's like I have, discretionary or subjective analysis. I put my boundaries, I put my, my structure around prices, but it's what I look at. It's arbitrary. And at the end of the day, the only thing that's right is the market. Nothing else is right. Not governments, not Federal Reserve chairmen, not CEOs of Fortune 500. The only thing that's right is the market. And so what I try and do is put my structure around prices and then try and observe how prices play within these structures. And so again, this is a perfect symmetrical triangle. You could make a case either way. Either argument would be, good, that this thing is, now going to break out, go that way, because, at the beginning of this, we have what looks like a double bottom price pattern. The problem I have with a double bottom price pattern is that if a market bottoms, then it should do this. We should have a case of, higher lows and higher highs. But instead, we have a case of lower highs. So after this thing so-called bottomed, we've just made a case of, lower lows and lower highs, which is not consistent with a bottoming market. And so that's why color me skeptical, that I don't see that we're going to have this sustained move to the upside, even though I told my members to go long last night, on the price action that I saw at the time. And then now you have to say to yourself, which is the real pattern that's going to govern or dictate the next move? Is it the current pattern where we see a very clear double bottom and arguably inverted head and shoulders? And it looks like, we broke out of this neckline right here about 127. So since we cleared out of that, it looks like kind of a green light to a higher move. And right now, the market is, adhering to this, very orderly uptrend line. And so it looks like it's game on, that this thing could be, ready to change what it's been doing for 12 years. And, to your question, I forgot who it was, Vladimir, how do you choose which pattern? So for a while, I have been in conflict because very clearly to me, these were also, governing price patterns. Within this downtrend, once you saw this head and shoulders, prices moved lower. Then after you had that head and shoulders, you had this double top. Prices moved lower. So those patterns have been governing or dictating price action to this point. And, maybe it's a case that was then and this is now. So, the only way we'll know is that price will tell us. At some point, if this thing doesn't stop going up, it's going to keep going up, right? By definition, if something doesn't go down, it's going to go up. So, I would expect that there is going to be some resistance right in here somewhere. And if this manages to kind of take out these, these areas, that means something, is likely changing. And this is how we can dial into just a monster move that you could sit in this thing for a year. Once you understand if this thing is, going to start breaking out. And so, we're at this moment, we have this very narrow range bar this week. Let's see how we're right at this pivot point. This is the moment of truth. We're right on this, this multi-decade, inflection line here. And, price will tell us one way or another. And so this is the conflict we run into, is this double bottom guiding the patterns, or, is that double top head and shoulders, dictating, what's going to happen, and that we're going to go back in here. There's so many things that are changing in the markets, quantitative easing and central bank coordination, that you can't just rule out, a huge paradigm shift in, a market. But I just have a hard time seeing it cut through all of this. I just, still have to see, how that can do that. But, that's the beauty about markets. So I've been saying, our members, I've been on the fence for a while. I've been kind of tentatively having one foot on the long side, always afraid that this thing's I'm going to wake up one day and it's going to do this to me. So I haven't really played this well for all of its benefit because the euro and the pound yen have been in some very nice, uptrends for a while. But, I've just been so kind of skeptical. And so, we're at this point where you had a key reversal right here. And, let's see, what we do. If we just can close strong here, and this thing's just, on a monster uptrend line, it looks very orderly. So typically when prices start getting very volatile, it indicates that maybe there's some change in direction. But this has been, very orderly. So this is, you can see the conflict right here. Here's that double top, and then here's that double bottom. And, which one is going to rule? And look, the fact that this thing has come this far kind of suggests to me that we're getting a turn. You had kind of the neckline all the way here, 123 that it broke out. And then you could argue you had another one at 127. And, we've cleared that, and we just look like we're on a very orderly ascension higher. And now we've just got to, make it through all of this, price history here. So it's going to be really interesting. But, if I had to, you put a gun to my head, I'd say, you have to go with the path of least resistance, which is higher. All right, guys, I think I'm going to end it there. I'll see you tomorrow, 4 p.m. Eastern Standard Time. Hope you got a ton of value out of this webinar. Again, all I'm trying to do is, share ideas on how I look at, setting up trades that can position you for big moves. And whether it happens, this week or next week, it doesn't really matter. You just need, half a dozen good moves a year to, put you in a very healthy. So Benjamin says, very insightful. Mustafa, you're always welcome. Jay-Z, much appreciated. You're welcome. Brent, you're welcome. So thanks everybody for attending. Thanks for your support, and I will see you. So you saw says, nice presentations. Sorry, it goes so quick. All right, guys, I'll see you back here tomorrow.